Hello and welcome to Fantasy Fund Manager 2 Top Tips for Success. My name is Sam Brodbeck and I am the personal finance editor at the Telegraph, coming to you live from Tier 3 in Kent. I'm also currently languishing at around 1,700 in the rankings for Fantasy Fund Manager Season 2, but more on my failing strategy later. In this 45-minute session, we will be taking you through how the game works, providing some strategy tips, and hearing how the winner and runner-up from Season 1 rose to the top. Now, in Season 1, it was the gold price that propelled many of you to the top of the leaderboard. What theme or event will be the keystone to success this time around? Could it be a vaccine, Brexit, or a new US president, or something entirely unexpected? We'll be discussing all of this. Right, before we bring on our champion investors, I wanted to give you a very quick overview of how the game works, just in case we do have some newbies, so it makes sense actually that I do this now. So you have to pick a minimum of 5 and a maximum of 20 stocks from the FTSE 350. We have a randomizer, which can pick the stocks for you, or you can use some of the analytics tools, which you'll find on the top of the taskbar once you're actually in the game. And they're the kind of metrics used by professional investors. And there's a couple of things I also wanted to point out, which we get lots of questions about, and I thought it would be good just to kind of cover them off. So the first one is about trading, how trading works in the game. Trades are made at 8 a.m. in the morning when the London stock market opens, not during the day. So if you make a trade at 1 minute past 8, you have to wait 24 hours for it to actually take effect. There is Mike. Hi, Mike.
Hi, Sam.
And I don't know if we can hear Carol. We might be able to see Carol. There she is. She might disappear at any moment.
Yes. Hello.
Right, we can just about hear her. Mike, I wanted to chat to you first. First of all, for anyone listening, your name in the game at the moment is Lightning Strikes Twice, isn't it? Lightning Strike Twice.
It is, yeah.
Just so anyone wants to know where you are. But I wanted to go back to the very beginning. You triumphed in Season 1. Could you just take us through your background in investing?
Okay, sure.
Before you play the game? Do you manage your own pensions and ISA and that sort of thing?
Thanks for having me on, Sam, and thanks to the Telegraph for running in the competition. Obviously, winning 20,000 was quite nice. I've always invested as an adult, but really just with small amounts, just for fun, until probably the last 5 years or so, when I've sort of taken control of my SIP and ISAs, and probably traded a bit more frequently, and taken a bit more interest in the stock market.
Got you, right. Now, last time, I think I mentioned already, last time the gold price was a real key driver of the people that got to the top of the table. That dropped away towards the end, didn't it? And I just wondered if, I believe you're a doctor, so I'm guessing you've got a bit more expertise in this than we do. But I just wondered if you thought the vaccine would play the same role as gold. Do you think that will be the key driver this time around, or is it something else?
Yeah, I mean, I think gold was certainly the trade of the last competition. I think all the people who were near the top had big positions in gold, and it was quite incredible. Actually, some people hadn't traded out of the gold, and they still stayed really quite near the top. And yes, that's certainly fallen away as the exuberance over the vaccine and the reflex. And I think it will come back at some point. I'm quite a big believer in gold as a hedge and as an investment going forward. But yeah, certainly for the early part of this competition, I think it's probably not the position to be in. So I was looking more towards other commodities like copper and even base metals to be, a sort of a core component of the portfolio going forward.
Okay, sure. Well, when I come back to sort of themes, I think broad themes later. But I just wanted to go back again briefly and just talk about how you got to the top, because I think you didn't start particularly well. and then you kind of cottoned onto the gold thing, I think, through your son who was playing as well.
That's right. Yeah. So I didn't really have a theme when I started. I sort of had a wide scattering of various shares that I thought might do well, but I was languishing down, at about several thousand down the leaderboard. But I saw my son, who basically just picked mostly gold, and he was right up at about 100, 150. And then I realized all the other top competitors had that. So I sort of matched them for a good part of the competition, until I realized actually they weren't trading out of gold, and I was in gold, so I was never going to overtake them until unless I did something. And then what I did then is start to read the news items in the morning and started to be much more actively trading and taking risks with individual share punts. But as I say, it's good to have a core holding, and it's good to have a theme. I mean, you have to be risky if you want to win it. So I think whether that's going to be in gold or base metals or companies, if you hope that things are going to, I don't know, but it's not a bad idea to take a punt on one sort of section. And it's early days, so you could always change your mind or change your portfolio as.
Yeah, and I guess obviously there's a bit or a lot of luck involved. I think one of yours was, there was a takeover, wasn't there? You were holding William Hill, I think, and then suddenly this takeover happened and the stock jumped. You think that's the kind of, I don't know if you can act, it's hard to know when these takeovers are going to happen, aren't they? Obviously, that's why the market reacts in that way. Are you sort of looking for that sort of thing at the moment, or is it just too hard to predict?
It is quite hard to predict, but it's a theme that you could play. You could look at shares that are takeover targets. Certainly, I was thinking William Hill might have been a takeover target because there was chatter that American companies were looking at British internet companies. So I was also traveling to Greece in the very last week of the competition, and I knew I was going to be on a boat and probably wouldn't be able to trade very much. So I thought I'd have to make a big punt, and if it came off, great. And literally the day I flew, William Hill got this takeover announcement. So, and I'd also put some money or put a trade on 888 with the same sort of thing, and of course they got a boost as well because some people thought that they may be the next takeover target. So it really put me from wherever I was, 25th or whatever, to first. So yeah, you could do that. You could just sit on stocks that you think may be a takeover target. There's plenty out there, but the chances of them being a takeover in the next 3 months would probably be slim. But if it happens, then you get a great boost.
Yes, absolutely. And I guess you could argue that because of how weak the British stock market is at the moment, that there might be some takeovers because they are looking pretty cheap, I think, globally.
Absolutely, yeah. Well, the pound's recovering a little bit, but there's plenty of stocks there that very richly priced American companies would want to take over. So I think companies that are ripe. I keep thinking Smith and Nephews. It's only a matter of taking over. I haven't put it in my portfolio, but maybe that's something like that would be a thought for going forward. Yeah.
Great. Now there are lots of good questions coming through, and actually let's answer one now, just because we're talking about takeovers. Carol, I am going to come to you, but I just want to answer a quick question on takeovers, and then I'll come to you. So Rory's got a question here. While we're talking about takeovers / mergers, is BP and Shell on the cards? So the two oil majors. I've not heard of anything like that. I'll be interested to see what people listening think. I don't know if you've got any thoughts on that, Mike.
Yeah, that would be a mega merger. They've obviously been under a lot of stress, the oil companies in general, and oil majors, but that would be a big consolidation. I don't know if that's probably on the cards. I would think it's more smaller companies being taken over by BP or Shell or Exxon going forward. It would be amazing if that actually, I can't see it happening in the next 3 months, but hey.
I think you're right. I mean, Andrew's made a good point here about competition issue, whether that would actually even be allowed. We know the competition regulators got involved before with far smaller companies. So that's quite a good point. Right, now I need to bring Carol in, otherwise we'll never hear from her. Carol, can you hear me?
Yes, I can hear you.
Brilliant. Excellent. Now, let's go back to the beginning of sort of your journey, because I think you're sort of maybe coming from a different place from Mike, where you never really invested before you started playing the game. Is that right?
Yeah, and I didn't really do any sort of proper investment, as I'd call it. But I did, I bought shares in the past, but never with any real sort of other than just finding a bit and buying at the time when I'd got some cash. But no, I'd not really done opportunity for me to actually learn about the stock market a little bit and understand. And I think my observation now coming back into the second game is that the season that we went through from sort of July was not normal. I mean, we're still not in a normal situation. So I feel like anything can happen at the moment, which is quite exciting, but also very challenging for investors.
Yeah, absolutely. I completely agree. But let's talk about, because you do have, although you've not invested much before, I know your sort of professional background, I think, is probably quite useful.
Yeah, I mean, I'm a qualified accountant. I mean, I'm a management consultant and a qualified accountant, and I think because I'm not going into the markets initially thinking that they were having a mind of their own and a little bit sort of more, they sort of a bit of a sentiment there. I was thinking just purely in terms of numbers, you'd expect certain companies to do quite well. And I think it was only when I realised that actually the markets have a little bit of a sentiment to them, and actually, trends and things and what people are thinking and what the news is saying can have quite an influence regardless of what the numbers are saying, that I started to think, actually, I need to change my strategy a little bit, rather than just looking at purely numerical. But I mean, I was also learning a bit like Mike from people who were already being successful, and I think I got into gold as well, and that gave me a bit of a boost. I think when I first started in July, I was quite fortunate because I think I tapped into some of the, I was quite into the building shares, and house building shares did quite well, I think, in the first couple of weeks of the game the last time. So that gave me a bit of a boost, at least to start being into the profitable side. And then I sort of built that out a bit with gold. But then I languished a bit for a month with being about up and down around the same kind of area. And as I was learning, sort of investing slightly differently, and I kind of got quite fond of some of the retail shares, which were doing quite well because of the lockdown. And I think we're not seeing the same trends now as we did in the first lockdown.
No, I think you're right. It was a very, very strange market at that point, wasn't it? And I think you're right now about your point about the markets being emotional. I mean, we tend to think of them as kind of rational, but I mean, they're clearly not. When we had all that good vaccine news, which maybe we'll come on to because that has clearly had a huge impact. Ocado and the likes of those companies that have done quite well suddenly plunged as if no one was going to use Ocado anymore. Which was clearly like an emotional reaction to the market rather than anything else. But I'm interested that you think the retail stocks might come back. So I guess that's what people would normally call a kind of value approach, the ones that have really been beaten up. I think you have M&S in your portfolio.
Yeah, absolutely. Yeah, absolutely. I have it in my personal portfolio as well, but I think I bought it at a better time.
Yes, exactly. So that's also it. You could argue that a lot of the kind of good vaccine news has already been baked in now. And if we get progressively better news, I don't know if you have opinions on how much further that's going to go.
I don't know. I mean, I'm very much languishing at the bottom at the moment. It's quite a new experience. I think I'm about 100 from the bottom. But my philosophy, yet again, with my name tag being the same, optimistic, is I've got to learn how to do this. And being in the position, I mean, I still, having gone through the first game, I still feel that I can actually get back into the black, and possibly from where I am today, I still believe I could possibly get to the top 20. Because I've seen it happen. I mean, I know how it happened in the first game. So for anybody that's actually languishing in the bottom and thinking, oh, I should change my name, I should get out and start again, which is another strategy. I'm going to stay with where I am, and I'm going to play it and see how I do. So I'm still going to stick with what I believe at the moment.
Well, I just want to bring in a few questions now, because we've had a few coming in, which I think are interesting for various reasons. There's one here from Robert Nicholson, who asks whether we think it's better to buy and hold or to switch. You know, day to day, I guess some people would do it. And Andrew makes a good point that the competition is trading. This isn't like normal investing where you know, I don't know what Warren Buffett says, but the best stock is one you hold forever. That doesn't necessarily work in a game like this. It's all about a 3-month discrete period. So I'd be interested to hear from both of you. Maybe Mike, you could start. You know, is there anything you think you're going to buy and hold, or will you kind of day by day be changing things?
Yeah, obviously the best way would be to buy and hold a stock that just grudged up through the competition. But you know, it's rare for that to happen unless you have news. So what I did with trading was see the news stories at the beginning of the day and make a decision what stocks to hold for that day based on that news, and I got some good results. I think I looked at Pets at Home's results when they came in, and it boosted the portfolio value, you know, by about 10%. Rose, you know, incredibly strongly on the day. So the only issue with trading in and out is that you're dependent on what the market makers price the stock at. That'll depend partly on the news that comes in, but partly on what the closing price was the night before. And so you can get a bit caught out by that. If you think a stock's news or trading statement is really good, then the market makers may feel that as well. So the price that you end up buying it at 8 o'clock is right up there, and it may actually not go up during the day, may actually even fall. So I did get caught out towards the end of the competition with Greg's. It came out with a trading statement. Its share price was on the floor. I thought the trading statement was a bit better than people would have expected, but the price just gradually slipped as the day went on, and I made a loss on it, even though now it's up much higher than it was when I did that trade. So what I look for is results that are better than expectations, but then you also have to look at the graph and see what the expectations would be, and relative to what it was this time last year, with the same sort of results coming in. And it's not the same as buying a share for your own portfolio, where you can afford to sit with it and cherish it, so to speak, and live with it for a long period of time. You're really trying to get that short boost. So yeah, you can certainly trade on the results, but be careful of those traps which the market makers set for you when they set the price too high to start with.
Yeah, I suppose that's something that probably people don't think about too much, the role of market makers. And Robert's saying thank you for that explanation. But Carol, let's come on to you. How much do you trade? And I don't know, were there any stocks you had last time that you held throughout?
Yeah, I mean, I had a similar approach really to Mike. I was looking at what was happening in the morning, and looking at any trading announcements or any quarterly results. I mean, you can actually go and get calendars that will tell you which companies are meant to be making statements when, and then you can look out for them in the morning. But again, sometimes you can buy a stock in the morning because the Telegraph game is a day-to-day trade. It's like an in-day trade. So you have to decide what you're going to buy before the day or before sort of quarter to eight, basically, time like that, where you can put the profile in before that market opens. And I've been caught out. I've got a bit of feedback. I don't know if you've got the same sound as me, but I'm hearing myself twice.
Yeah, you're fine. Keep going.
Okay. So, I mean, I would say the same thing. I've bought shares first thing in the morning, put punts in for shares first thing in the morning, and found that the actual price of the share on the day goes up, but my purchase price has gone down, so you don't actually make as much money as you expect. I think I got caught out like that with Future, and I think Future had a trading statement this week, or had end of year results were very good. Really good, stunningly good, but then they bought Go Compare for some reason, and I mean that was bizarre. So the market said, "What the hell? Why have we done that?" And I think the Future shares went down 16% on the day, which was crazy because they're a really good business, but actually the market wasn't understanding what the message was, so they got punished for that. And I think it's things like that you need to watch out if you are looking at shares to trade on the day. So my philosophy was I would actually probably monitor my shares, and I quite often diversified into a portfolio of about 10 shares, maybe up to 15 shares sometimes, and maybe have 20% in some and 5% in others, because I was getting sort of a blended approach. And in the first game, certainly I hated to see my portfolio go down, so I was trying to protect it and keep going up a little bit, even if it was only incrementally. So that was one of the approaches I took. But I think I had the same experience with bets at home. I think I managed to buy them on a really good upswing, and I think sometimes that you can see it, you can anticipate it, and if you know what the calendar for trading statements is, you might buy into the stocks a day or two before if you think they're going to do really well, and then they might go down the day before, or they might go up a little bit, and then on the day they might go up a lot. But if you buy into them before the actual trading day, you might benefit more from that.
I think that's a really good point. Being organised will be a big part of your strategy.
Yeah.
It'd be interesting to hear from both of you. Maybe Carol, you can start, but are there any websites you use to keep a log of when statements are coming out?
I've used Hargreaves Lansdown, I think, who they publish a monthly calendar of events, and I think there's another one. I can't remember what it's called now, but there's another one I use, which, I mean, I just look them up on Google, basically look up trading statements, or look, and usually you get one or two different companies that publish them. So that's, and my own investments are with II investors. That's where my pension's invested, and they actually publish information as well, so they're quite helpful. So if you've got anything that you're investing in yourself, in your private portfolios, you can quite often get information from their site.
Yeah, that's interesting. I'm going to put a link to a site that we use quite a lot when we're reporting on stocks. It's called Investigate, FE Investigate, and that's quite a neat. It has a kind of day-to-day calendar in there. And you can see, if you have a quick look on there, you'll see all the various indices, and it gives you the times as well. So you can, I mean, there is something throughout the day, which I think we've probably not as useful in this game, but in general, it's actually a very good service. So I've just stuck the link in there now, so anyone listening can have a play on that. I think we should start looking at, well, actually, one thing I wanted to say was, I know we talked already about your, the fact that you look at the documents in the morning and then you make a decision. You have to, they come out normally at 7, and then you've got to do something probably by about 7:45 for it to take effect. Is there any sort of metric or any bit of the company announcement that you home in on? Do you look at, I don't know, the profit figures or the chairman's statement, or, because it's hard to digest all that information quickly?
Yeah, I usually look for a good news story, or at least a good future proofing. So, the protection of the future profitability of the company is obviously critical, however that happens. And also a good news. The market usually responds much better to a positive message, even if the business metrics don't look quite so good. I've seen, at least in the current situation, that quite often if the chairman's message is the COVID situation, it's very uncertain, everybody goes, oh yeah, well, we all know that, so what are you doing about it, kind of thing. So if they give a more positive, yes, even not even saying the uncertain word, we all know it's uncertain, but to say this is what the business is doing about it and this is what we're projecting out into the next year or 2 years, then it becomes a more positive message, I think, because I think we all appreciate we can't make definite statements at the moment that are really credible. So let's think about what we can say. And I think that's certainly been my observation, that obviously the business metrics have to be good, the company has to be profitable, they have to have shored up and to be able to see a future, even if it means they're diversifying or spreading out how they're going to do things. But to see that the business has been able to save money in the short term and is able to project that it's got something good happening in towards middle and end of 2021 and beyond, always seems to have a good effect in what I'm seeing anyway.
Interesting.
Although it is very sentimental, the market, and I think because we've had the good news about the vaccines and we're having great news from some of the retailers, but everybody's thinking, well, actually, it's all based on, it's all based on the purchasing patterns of being able to do buying remotely, which is great. But what's the future? So, as you say, Ocado is not going to go out of business, but it's not actually being the most favourable share at the moment.
Absolutely. Mike, what sort of do you look for? Is there a number you home in on?
Yeah, your sound isn't very good, Sam, but I think you were asking what I look for in the results in the morning. Yeah. So you've only got a short period of time. It comes in at 7. You've got to make your trade before 8. I need to leave for work at 7:30. So you're just looking for a flavor, and words like beats expectations can sort of trigger your interest. But when you see that, yes, you've got to see, well, what are the expectations already? I've got a stock today that I own personally. It's not available in the competition because it's a smaller cap one called DX. It's a logistics firm, and they came out saying they're going to beat expectations. The stock opened up at about 6% higher, just stayed at 6%. But if you look at the share price over the last 6 months, it's gradually gone up. So that was sort of expected. So you may have to look back and see what the graph is telling you about where this stock is now compared to what the expectations and results were 6 months, a year ago.
Got you. Right. Now, I think we should start looking further ahead because we haven't got long left, actually. And I wanted to ask another question, which we haven't really touched on yet. But what is going to be the biggest impact on the game in terms of theme? So, Lanra or Jade, if you're listening, could you put up the third question, which is about what will have the most impact? So everyone listening, you should be able to see a question now appearing on the poll. And what do you think will have the most effect on UK stocks over the next 3 months? A vaccine, Brexit, we haven't even touched on Brexit, or Joe Biden taking over as president? So at the moment, it's a vaccine and Brexit, a few for Joe Biden. Clearly people don't think he's going to do that, anything too dramatic. Right, the final result it was neck and neck, as it always is with Brexit, but Brexit just ahead of a vaccine, which is interesting because, the markets till now have all been, I think they've all been driven by the end of lockdown, going back into lockdown, a vaccine, what have you. But actually people think Brexit is going to be the defining effect. I wonder if I don't know if that's factoring in the possibility of a no deal Brexit, which obviously is uncharted waters. I suppose if we get a deal, it might actually, you think it would push the market up. Carol, what do you think about that?
I don't. I think the market's already factored in a lot of the Brexit because we've been in the situation. We've been in it for a long time, and I think the COVID situation probably threw a bit of a spanner in the works from a Brexit perspective because it warped the market sentiment quite a lot towards a bit more home based, I guess. But also a lot of the FTSE 100 are actually invested outside of the UK. So I guess the question then is how much of an impact. I mean, I'm a bit 50-50 on Brexit. I would say the vaccine is more likely to have more impact, and I think Joe Biden would probably be my number two, because I just think Brexit, if it's a no deal Brexit, it will have an impact on the market, but I think that might be quite short term because I think a lot of it's already built in to the stock.
That's really interesting. What do you think?
Yeah, I think, 3 months of vaccine. I don't think enough people have been vaccinated within 3 months to have an effect on our ability to do things. And it's already priced in, obviously, huge swings in stock prices based on it, which all seem a bit strange. But Brexit, yeah, I think that's. I mean, the best thing about the pandemic is we've forgotten about Brexit. If there can be a saving grace, then we've got it. But if we have a no deal, yeah, that's going to really shake things up. Probably not for the best. And Joe Biden, well, no, I don't think so. He's going to be a steady hand on the tiller. And really, the things that moving markets are the Federal Reserve printing money like there's no tomorrow, and that will continue. So I think Brexit's probably got the best chance of upsetting the apple cart, but I don't think any of them will have huge influences. Really, it'll be something else that we haven't thought about.
Interesting. I feel like it goes back to Carol's point about emotion and the markets. I feel like almost any vaguely positive news on a vaccine, if it's it's going to come a month earlier than we thought, that'll boost markets. If it's the other way around, they'll dip again, and it all depends what happens, I guess, in those days before the end of the game, really, because it's whoever's top on that day, and as you know, it can change very quickly. So I don't know, you almost can't call it, can you? But I mean, it's just interesting that people listening really think Brexit actually is the main driver. I suppose it's all happening around, so that's January, the game finishes sort of mid-February, so there's a little bit of time afterwards to kind of digest it, I suppose. Anyway, interesting. Right, the last thing I want to talk about was I wanted to sort of go into what we actually personally invest in outside of the game, if people don't mind saying that, because I think that's, as we said, investing is trading, really, the game. And on the money section, we like to talk about long-term investing, really, rather than this sort of stuff. So I'd be interested in your views on that. And the other thing I wanted to mention, just for people listening, because something that kind of evaded me a little bit early on, was the fact that you can use investment trusts, which are listed funds, which can give you exposure to other bits of the world. So it's the FTSE 350, but within that you've got Scottish Mortgage, which is one of the stocks I hold in real life, and that invests mainly in technology, US technology stocks at the moment. So, because a lot of people have said, why can't we invest in Facebook and Apple and all this sort of thing? But you actually, you sort of can through some of these. Likewise with China, and there's a JP Morgan Trust for emerging markets. And that was I just wanted to throw that out there. I don't know if any of you two use them, but I certainly do in real life. But Mike, it'd be interesting to hear what you invest in sort of outside of the game.
Yeah, I've got some unit trusts, as they used to be called. Not sure what they're called these days, but yeah, I've got some of those, which gives me exposure to things outside Britain. I haven't invested in investment trusts like you, Sam, but that is a good way to do it. Actually, I think sometimes you can buy below the net asset value, so you're buying at a discount. But I've just always traded small stocks, usually technology stocks, which I think is probably a long-term advantage to gains. But small stocks, I think you can do your own research, and you can probably get more idea about a company than the general market, because they're not particularly followed very well, not researched well. So you can have an idea that they may be in a very positive area and they're a positive company, and those are the sort of stocks that I invest in. So small caps and technology based is my sort of shall we say interest.
Yeah, so sort of investing in stuff that you know about personally in your kind of...
Yeah. So I'm interested in sort of biotechs and health and things. So I do invest quite a bit in that. Yeah.
Yeah, it's a shame that I don't think media companies are particularly investable. Maybe not for the last 20 years or so. But so that's my area of expertise out the window. Carol, if you can still hear me, I just wondered if I know you were kind of new to investing when the game started, but have you since been dabbling in real life?
Yeah, so I've got I'm dabbling a little bit in my self-invested pension plan, but I've got three for myself. I've got three tracker funds. One is the UK tracker, one's a all world, and one's a US. I've had those for about four and a half, 5 years now, and the US one is by far and away performing best. And then I've branched out and I've taken about 20% of my fund into my mixed portfolio, which is kind of learning from the first game. And I think I've got about 16 different stocks. Some of them are FTSE. There's a mixture, really. They're stocks that I'm sentimental about a little bit, and maybe I shouldn't be. And there's a mixture. I think the other Sam who I spoke to said that I said I'd never invest in mining shares again. I don't think I said that. I actually quite like the mining shares because I think they're kind of solid and predictable, and you know where they're, you usually know what's behind them. But my own portfolio, a bit like Mike, I've got some small caps. I've gone a bit into the alternative investment market. And at the moment, my own portfolio, which I've been investing in since October, is up about 5%. So I'm happy, but I still have some negatives and some positives. And I think that's what I said about the game. It's a game, and I think there's some of the comments are coming up saying that we're not looking at how we would invest if we were really investing. We're looking at how do we win £10,000 in the next 3 months, and that's a different kind of strategy. And also knowing that once you've invested or once you've decided on your stock on the day, you can't change it. You're stuck with it till the next day, or at least you can decide to keep it for longer. So. But yes, I'm definitely putting my money where my learning is, which is good. But my own portfolio is very much different to my game portfolio.
Yeah, and probably a good thing too. The last thing I wanted to say was just something that I thought I read today, which I thought was worth touching on. Gold was the kind of huge theme of last time, and I noted there was some interesting comments from Jeff Curry, who's the head of commodities at Goldman Sachs, who are normally not bad at predicting these things. And he was talking about the beginning of a commodity super cycle, which I took to kind of read as, we've had this sort of suppressed demand and the oil price has been on the floor. And I did wonder if that was something that could sneak up on us a little bit. When the world does reopen, there's also been a quite dramatic drop, I think, in kind of investment from the oil companies. So, presumably supply is quite low. So that was just another thing I thought I'd throw out there. I don't know if you've got any opinions on that, Mike?
Yeah, well, I think one of the big themes going forward, especially with Joe Biden becoming president, is alternative energy. So the commodities like copper and silver, which are essential for electric cars and sort of solar panels and all those sort of things, I think they'll do well going forward. He's promised to put huge investment into alternative energy, and we've all committed to going carbon neutral at some point in the future. So I can see those commodities doing really well.
Right. Interesting. That was probably our time for a final thought. Thank you for staying with us. Those of you there, I can see how you've all actually, not many people have dropped off despite our technical difficulties, despite not being able to see Carol.
Sorry,
no, it's not your fault,
sorry.
Carol. It's technology, isn't it? So maybe don't invest in tech stocks is what we're
Don't invest in
from
tech
this.
stocks, no.
So we are just about out of time. It just remains for me to say thank you to Mike and Carol for giving us our time. Thank you for watching.